I work for a company called Hub International. I'm a commercial account executive in the construction division, and I'm going to take you through insurance from its basics. So just a quick line of what risk really is and how insurance relates to that. From that, we're going to look at some specific contractor insurance, and then we're going to look at claims, how they're handled, how we control them, and what your broker should be offering you, and a little bit about us as a company. So we all know what health and safety risk is, right? So we're going to take through a couple. That's health and safety risk. He's obviously looking for a new pair of jeans after that one. Two guys on skids, you know, if you can't get over a wall, get help from a friend. There's plenty more of this. Obviously great to put paper on your face when you're going to be working with a welding torch. Towers, a bit like Jenga. Someone's going to pull that out and it falls to pieces. This is a variation on the other theme. You can see the lovely bit of plastic around the face. And yeah, another lift from a friend. Always great, mix power tools with water and a step ladder, which are banned on most sites. So we got that. If you can't find someone to help you do your truck, just crawl under it like that and hope it doesn't fall on your face. Got our friend again and a closer weld. So it's like he's smiling this time, so he's obviously getting his weld done properly. And here we go, just great health and safety from one of Canada's finest.
Nailed it.
Nailed it. So this is health and safety risk. We all know about health and safety. Are there any other kinds of risks that face a construction company, especially in the early days? Well, yeah, there's lots of different kinds of risks. The world of risk. So we've got two kinds of risk when we look at it. One's speculative. Speculative talks about a risk where you've got a chance of a loss or a gain. And then we've got pure risk, which is only chance of a loss, and that's where insurance comes in. You can only insure for pure risks. So in risk management, you've got four options. Avoid, just don't get into the market. If you're not sure about the banking market, you're not going to do banking, you avoid that risk. Control, so that's your risk control stuff, your site safety, you're controlling the risk before it happens. Retain, that's if you've got contingency funds, so if something goes wrong, then you've got the money to back it up. Or transfer, this is where we start getting into bonding, into insurance, where you actually transfer the risk over to somebody else. So within that, there's various classes of risk. Property risk, your property, your headquarters, or off-premises property, so your tools, equipment, everything off-site. Public risk, I'm not going to go through all of this, but this is any risk to a third party. So that's either damage to their property, or that's damage to themselves, personal injury, and anything that could take bad effect against the environment, or actually any bad decisions made by directors and officers of liability, and cyber liability, hacking, etc. So what is insurance? The phrase that we throw around is cost of the losses of the few shared amongst the many, and basically that just means there's a large pot where premiums go into, and that allows them to pay off claims. And then on top of that, the insurer has to make their overheads and their margins work as well. We mentioned the insurable risks, speculative and pure, and perils and hazards. This causes a bit of confusion. So a peril is essentially an event which may cause a loss. So lightning, fire, flood. A hazard. A hazard is a condition which allows a peril to occur. So a hazard would be storing flammable materials on a site that could cause a peril, being fire. Limits and deductibles, I'm sure you're all very familiar with these because everyone hates paying deductibles, but it's a part of life. And then when you actually look at insurance, you have aggregate limits. So your main limit is how much per event. So if you have a property loss that's, say, $100,000, that's your main limit, one event. Then you have the aggregate limit. So that might actually go up to $1 million. So you've got 10 opportunities to claim on that before you have to pay a reinstatement premium. An exclusion is actually an item or a risk that's not specifically covered by an insurance policy. You'll see an exclusion for on the general liability policy for environmental pollution liability, which is something you have to buy in after. A warranty is a promise by the insured party that the statements in the policy of the contract are actually true that you've made, and you have to hold. It's like a promise. So you have hot roofing work and welding, which is you have a hot welding and roof tarring warranty. That means you have to have somebody on site basically watching the embers until they go out, and that can be really expensive and really boring for the person doing it. An endorsement as well is a change to the policy, which is usually tabbed onto the back, which adds coverage, which also can delete coverage, and that can change it in its entirety as well. So this is the juiciest stuff, insuring the contractor. So the main thing everyone asks about is liability insurance. General liability in its nature, it's third party, so you're not insuring anything that happens to yourself. It's not personal risk. The trigger is negligence or nuisance. A negligent act has to actually have occurred, and that has to be proven. We'll get onto that later. That's whenever you have an auto accident, you don't want to say, oh yeah, I'm liable straight away. Let the insurance company take care of that for you. Then there's nuisance, so it could be anything from jackhammers going off or causing a public disturbance after 10 o'clock. Bodily injury and property damage as well. This covers those two sides, injury or damage to third-party person's property. And then you're liable for any of these third-party liabilities for three kinds of damages. Special damages, medical bills; general damages, pain and suffering; and punitive damages, which is a punishment for causing that wrong. So your insurance company actually has a duty to defend you. So if there's a negligent act, they will step in. They will, if you're deemed negligent, they will actually pay for the damages, and they will actually do something called subrogation. So they step into the shoes of yourself, and they can legally sue the third party. And it's good because these insurance companies, they actually have very strong legal teams behind them, and they can usually come into bat for you where you may not be able to afford it otherwise. Liability premiums, how is it determined? It's all determined, especially on contractors, with your revenue. So it's a rate that's applied to your revenue for the year based upon the operations that you do. A guy that has plenty of snow removal contracts is going to be much more expensive on the liability side for slips and trips than you'd have for somebody just doing residential construction, the same single family dwelling over and over again. So we've got the wrap-up liability, and I won't go into this too much detail, but this is project specific, and the owner can actually place this on your behalf, or the general can place it, and it actually covers the general and the subcontractors all the way through, and it basically stops the blame game. So if something happens on site, the project doesn't get slowed down because the finger pointing comes out, and it just keeps the project falling along, and the subcontract doesn't have to pay for it. And a good thing to know here is if you're reading through your RFP and you're actually covered under wrap-up liability, you should tell your insurer or your broker that, and how many projects you actually do under wrap-up, because that will reduce your liability premium quite substantially. Okay, professional liability and contractors E&O, errors and omissions. So this is really important to know, because some guys don't realise they can be on the hook, especially HVAC guys that are designing their own runs to put in HVAC runs and mechanical work. They have to have that stamped off. If it's not stamped off, then they can be liable for any omissions in design. Property insurance, so there's two kinds again. You've got named perils, which is the cheaper option. Every peril, so that's fire, lightning, flood, is listed on your policy. Or you have the all risks form. If it's not specifically excluded, so as we said before, taken out from your contract, then they're covered. And just to know, processes involving heat for anyone on the welding side or hot work, roofing works excluded, you have to buy extra coverage. And for sparkies as well, power surges to electrical equipment's not covered. I don't think everyone's going to be too worried about radioactive or war, unless you're worrying about liens. Types of property coverage, again, I'm not going to go through them all, but another good one to know on here is your miscellaneous property floater and your installation floater. So this is for materials, generally for sub-trades that are going into site, and your tools. If you leave tools on site, usually they're locked in a building, collusion or theft. Somebody could go in and steal all of your tools, and they wouldn't be covered underneath your on-premises tool. And then again, if you're get to the point you have your own project, builder's risk is very important, which covers anything that goes into the the project itself. So this is very important. On your property insurance, when it comes to claims, it's very important to have the correct property valuation. And the main part of that is how is your property valued and how will it pay out. So there's two kinds on the insurance policy. One is actual cash value, and actual cash value is the market price of the building at the time. So you can actually lose money on your property. I mean, we saw that up in Fort Mac, where people had bought their houses at the beginning of the boom. They had a big fire, came through, and then they're trying to get the insurance money, but it's only worth the money that it's worth in the downturn economy. Replacement cost is what you actually want to go for. Sometimes it can cost you a bit more, but depending on how much volume of business, how good your broker is, you can get that included, but generally it's going to cost you extra money. So you get three options there to replace the building. It has to be prompt replacement, rebuild, and it has to be on the same site or an adjacent site. You say if you had a commercial property and it was, in the Badlands in the North End somewhere, you can't go and rebuild the same thing in Summerside because of the land value costs, etc. And it has to be the like kind of quality for the same purpose of the building. You can't, have a commercial building as a garage and then want to build a hospital in the same size. It's different. Co-insurance as well. It's why it's really important to actually have a professional appraisal for your property. Because the co-insurance penalty, if you don't have it within a 80, 90 or 100% range, then you'll actually have your insurance payout reduced. So that's another one to note. Boiler machinery breakdown. If you have a boiler that you've installed as part of the property, it's not insured under general liability, and it covers repair and replacement and some of the air conditioning and the HVAC and production machinery is excluded. Course of construction, mentioned that earlier. I'm not going to go into too much detail. That's more for generals, but it's a good coverage to have, and we can talk about that at a later point. Auto, which everyone's pretty much affected to if you start building up a fleet. As you get larger, you've got third party. Minimum limit you have is 200 grand. Accident benefits. Somebody gets whiplash in an accident, then you've got to pay to get them put right again. And physical damage to the vehicle. And as you all know, there's three different kinds there, and they all cost different amounts. And it's all rated on the below: driver record, age, convictions, etc., etc. So one of those things. So the claims procedure. First thing I said: never admit liability. You want the insurance company to do that because you might admit liability, and you might not actually be fully liable, and your premium won't go up as a result. If you admit liability, then it's game over. Take pictures on site if possible. Obviously, if somebody is arms hanging off outside of a window, you don't want to be there with your phone snapping shots. And get third-party information, driver statements. So I do have an example. We have a booklet you can keep in your truck or van with prompts to do little diagrams. All that stuff really helps to get claims paid quickly. So what can you do now to control risk? This is loss prevention and risk control. This kind of action can actually make your insurance cheaper. And everyone's price on insurance is key. Drivers abstracts, keeping those at times of hire. Those are really important for your drivers. Have they had road testing? Not actually using them for personal use as well. That will reduce your premium down fairly significantly. And then specialist driver training programs. On the property side, the biggest thing is actually securing the site, and having security systems in place. And liability, snow removal. So there's lots of professional insurance brokers. I say professional. There's lots of insurance brokers out there, and a lot of people give the insurance industry a bad name. What should you really expect from a professional insurance broker? So the thing that I see is the most important is they need to know their products back in and out, because what's the point of having an insurance policy if it's not going to respond to a claim? There isn't one. Sometimes operations change, you haven't notified, okay, that's an exception, but they should be able to fit you out for what you need. Knowledge of the insurance market, knowing when it's going to be cheap, know when it's going to get expensive. There's too many guys in the business that I'm doing that just keep charging their clients extra premium without actually being able to substantiate that. I've won a lot of contracts by knowing what the market's doing, knowing when there's extra capacity, and knowing how far insurers will actually go down. and specialist knowledge of your field of work. You know, do you want a guy that does probably has 2 commercial contracts a year and mostly does gardening equipment or something like that, or just your house insurance, doing your commercial insurance? Probably not. You want somebody that's tied in to the marketplace and that knows people in the field. And often or not with clients, it gets to a point where I can help them network as well, introduce sub-trades to generals to owners. It's all, everybody kind of wins that situation, and there's not enough brokers doing that. So the basic services we should be providing, so you can check with your guy against what we do as a basic service: assisting in contract reviews on the insurance side. That section on RFP does get pretty confusing. The same with the indemnity side. We do that all day in, all day out. We know what limits to look at. We know hold harmless clauses, etc., things that can really trip you up. We'll get into that just shortly after. Quotes for new projects goes without saying. Surety and bonding as well. If they're in the construction business, they should be able to fit you up with pretty good surety and bonding. Always be careful of the insurance broker that pretends he knows what he's doing with surety and bonding. It's 2 different things. It's like, slinging mud on the wall compared to rigging up the electricals on site. Just so different. Certificates of insurance, these have to be right every single time, and we do, and they should be doing your administration for Comply Works, all of the certificate systems. And one thing that a lot of clients don't know or aren't told is that if a claim's in process, a good broker will actually step in and he will find out where the claim is for you, and he has the ability to be able to push the loss adjuster to get results and give you information on time. A bad broker will send it straight over to the insurance company and then just dust his hands off of it. Well, it's not up to you to be chasing them up, because it's a deep and detailed world, and your broker should be stepping into bat for you. Contractors checklist, we talked about this previously. Indemnification, hold harmless clause. These can be really big with the liquidated damages. You can be on hook for extra expenses, extra costs, legal costs, overheads that are incurred throughout the whole construction process if you're not careful. General insurance requirements, knowing what the limits are that you need to carry, knowing what the limits are of the general contractor are huge, because you can actually get to a point where there's a gap, and you have something called difference in conditions, difference in deductible, difference in limits insurance. Because if you have something like a wrap up in place on the site and you have a claim and it's deemed to be your fault, some of the generals know that they can pass down the liability and the deductible to the subcontractor, and so they actually get cheaper insurance because they put their deductibles at silly numbers like $100,000, and you can be on the hook to pay that deductible unless you have this policy in place. Certificates insurance as well. You need to know your additional insureds, who else has to pay on who else has access to the claims payments, and each different owner has different requirements. I don't know if anyone's worked with PCL previously, but those certificates, they need a lot, so it's good to know. So I'm going to keep this bit pretty brief. This is about us and what we do. We're a very fast growing brokerage. We're one of the largest in the world. We've actually just climbed from 9th to 8th in the year I was there, and previously we were 10th. We specialise in property and casualty, so the liability and the property side, and we have specialist divisions. We're large enough to do that. We grow by acquisition, so we buy small brokerages, we take the talent there, and then we utilise them and plug them into a bigger network. So we have that local presence and the kind of mum and pop shop feel, but we can tie into this large broker network. 92% client retention. I like to throw that one out there. We don't lose clients very often. And we have 9,000 plus employees growing all the time, and over 1 million clients. This is what I was speaking to before: global, regional and local. It's just the best of both worlds, and some of the larger guys can't do this. And just to let you know as well, we specialise in the mid-market and the smaller risks as well. We like to play in that space, and we're more amenable to that. We take what we call as a risk management approach. So we build all of our policies individually. We won't slump you into a program with every other contractor and then getting pinged for their claims. We start from the beginning, work out what your exposures are, look at the risk. If you're of a certain size, we control exposures. That's generally more for the larger generals. And then we look at the best way to finance the policy for you. And then these are the guys we work with, so all pretty big names. And this list is growing. Because we're in the mid space, we work with Peace Hills and the Dominions, etc., because they offer better premium bucks for the guys in front.